Hello and welcome everyone to this week's COT review. I'm Thomas from COTbase.com. Welcome to this week's Commitments of Traders review. Today we're going to have a look at the 48th COT report of this year, and as usual we're going to start off with the changes in commercials positions. Here we go. You can see a 40% change in commercials positions in the Chicago wheat market. We've got 28 in large speculators and 34 in small speculators. These changes are much greater than average size changes. You can see that. Last week we had a bearish COT change signal, and you can see that prices actually did go lower from there. Now we have a bullish COT change signal that of course could push prices a bit higher in the near term. Opening a 5 years chart, here we go. You can see that we're closer to bullish COT extreme levels. But as you may see on the chart, we've been experiencing these bullish COT extremes for quite some time now, and prices are still going lower and lower. So of course caution is advised. This just gives you a picture about the stress levels that have built up in the wheat market, and possibly or I would say eventually these stresses should take their effect on the market, and we should see higher prices coming. Live cattle is our next market with a 15% change in commercials positions. You can see the change size over here. We had a larger change last week, and you may see that there was a bit of a reaction afterwards, and then we saw a bit higher prices, and now we in the last 2 days of last week, Thursday and Friday, you can see that there was a decent decline. Now the COT change signal tells us that this decline can continue, but if we open the 5 years chart, we can get a picture from the extreme perspective of the market. Now you may see that we're more or less in between the two extremes. So the bullish one over here and the bearish one over there. So we're more or less in a neutral zone. But in relative terms, we can state that since we haven't seen such extreme for 72 reports now, which is of course 1.5 years, this can be considered an extreme that may affect prices, and we could see a bit of a decline coming soon. You can see that we had a relative extreme back over here that signaled this top, and this may also be a top, and we could see a bit lower prices coming. Palladium is our next market with a 12% change in commercials positions. Again, a bit larger than average change size, but if you look at the chart, the past couple of weeks we've been experiencing such changes quite often, so nothing too unusual over there. So let's just move over to the 5 years chart and see the extreme situation. We're moving away from a bullish extreme, a relative bullish extreme that you can see over here, and getting closer to relative bearish extreme levels. Nothing too large. You can see that we're far away from bearish all-time COT extreme levels, or close to all-time levels. So nevertheless, this tells us that we are getting closer to bearish levels as prices are going higher. Of course, we're not surprised about that. Let's move on and have a look at large speculators COT extreme. We've got cotton and copper on top of a list with all-time COT extreme. In cotton, we also have an all-time COT extreme in commercials positions as well. Of course, we talked about this last week, so the picture did not change anything dramatically, and you can see that we're more or less in the same place right now. So this is an extreme, an all-time COT extreme, telling us that prices should go lower. Of course, caution is advised here as well, because these extremes may widen for many weeks before we really reach that top. But nevertheless, it's a significant extreme. We don't see all-time COT extreme that often in the market. So another market that may give you opportunities in the upcoming few weeks. Copper, again, all-time COT extreme over there. Huge extreme, and you can see not only the extreme being large, but how dramatically we got there. So in a very significant and dynamic movement or changes in traders' positions got us to a level where we see this extreme. So it's a huge bearish COT extreme, and I think it's clearly visible that these bearish extremes in the past were pretty effective in copper markets. So I'm not saying we're going to see a decline right now. I can't say that, of course, but the strength of the COT Extreme seems to be very, very high, and of course the odds are that we would see a bit of a decline in prices. Okay, next market is the Kansas City wheat, another wheat to talk about, where we have a 98 report extreme, which is interesting to see such a bearish COT extreme situation happening at such low prices. You can see that is quite interesting. We had bullish extremes at the beginning of this year and the end of last year, and you can see that we did not get any reaction from price. So there's a steady and steep decline in the price of the wheat, not only the Chicago, but as you can see in the Kansas City wheat as well. And we're seeing this trend to continue. So I wouldn't say that this extreme signal would be the best opportunity to go even more short in the market. Of course, judging by the trend, this can easily continue, but it's definitely an interesting situation that we don't see that often in COT reports. Okay, that is going to be all for this review. Don't forget that we have the COT charts page where you can look at other COT charts for free. If you would like to have a more in-depth and a detailed COT analysis, then of course this is the page you should be looking at, where you can of course look at other COT report types, other data types. You can do your historical analysis on older COT reports. You can look at all markets, and of course you can set other important values as well. You can look at the long-term trend. You can look at the volume and open interest scores, the COT index as well. So a lot of great functions here, and I hope you are going to check them out. I hope you enjoyed this review. I hope to see you next week. Have a great weekend. Take care. Goodbye.